What's going on? It is James here with Crypto Common Sense, aka Three Peaks Trading, and I wanted to do a year-end video. Obviously, I don't do very many videos anymore, so I wanted to make this one kind of packed with some good life advice and hopefully some advice that will make a positive impact on some of you watching this who decide to do something different in 2024 than maybe what you've been doing so far. So I made this post on Facebook. It's a simple post, simply says, what if I could guarantee your success? And the reality is I can't. Okay, let me give you some breakdown of some simple facts in life. Most people fail at whatever it is they're doing because of emotions, whether it's ego, for example, they're embarrassed by something, whether it's fear, they're afraid that, what they're doing is not going to get them the result that they hope to achieve, or maybe even, make their life worse. Whether it's greed, where they want today, this instant gratification mindset that's so popular in 2023. I blame that on social media and also on life in general, video games, Netflix, etc. And I love video games. I'm not knocking games, but you think about how much the world has changed over the last 20 years, right? I think about when I was growing up as a kid in the 80s and 90s, if I wanted to watch something on television, we had two channels. We didn't have cable. We had two channels. We had channel 12 where I'm at and 23, basically Fox and then the local news station. And so if you wanted to watch something on TV, you had to wait until it came on TV. And then you had to, kind of run back and forth in commercial breaks if you needed to use the restroom or something. There was none of this. I'll watch it whenever I feel like it, push a button, boom, go, no commercials kind of stuff. I didn't have the internet until I was, 17, maybe 16, 17 years old. And of course, we're talking about early days internet, 28K dial-up, a page, even getting a picture to load was, line by line. Versus nowadays, we can go to the internet and get basically any information we want at the touch of a finger. You look at video games and the instant gratification. When you do something in a video game, you're instantly rewarded with some kind of gamification. Points, extra life, extra stats for your character, whatever it is. And in real life, you don't see that. If you go out and do something great today, you're not rewarded. Maybe if you do something great every day for the next year, you'll be rewarded, but no instant gratification. So our mindsets are broken. Our brains have been trained to go about life the wrong way. And so I wanted to kind of talk about this because the reality is barring some type of mental or physical handicap that, may preclude you from or exclude you from being able to do certain things, most people have an opportunity to write their own check in life and make their own path and do whatever it is they want to do. Years ago, I sold cars for a living. I stopped doing that in 2007. And I worked with a guy who had retired from the military and went into the car business. And he had been stationed all over the world. And he said, the difference in Americans and Europeans is Europeans work to live. Americans live to work. And that always kind of stuck with me because it's true in so many ways. I'm not saying this is everybody. We can't, be that stereotypical. But in general, in the U.S., people work themselves to death and then look back with regret because they missed out on their life. Whereas in Europe, a lot of people, depending on the areas of Europe, obviously, and hardships and things like that, people they're enjoying life first. When you look at the happiest countries on earth, it tends to be, in Europe, for example, Finland, Denmark, Scandinavian countries. So in this video, what I want to do is I'm going to talk a little bit about trading, but I also want to talk about this simple fact, whatever it is you're doing. Okay. So what if I guarantee you success if you followed a simple plan? Surprise, I could. So I'm going to give you some examples here. A lawn care company, right? If you wanted to start a lawn care company, I'm using this because it's completely off of the beaten path. It's not trading. It's not, technology centered. This works everywhere. When I was a kid, I started a lawn care company. I was about 12 years old and I had my own lawnmower. I think it was actually my dad's lawnmower, if I remember right. It was just a push mower, not self-propelled, nothing fancy. And I told my dad I wanted to start a business and his reply was great. But that was pretty much it. Went to my neighbor's house. He decided he wanted to go in with me. He also had a lawnmower and we were both about 11, 12 years old. So we went, we had allowances. I got $2 a week allowance. This is like early 90s. So $2 wasn't a lot, but it was enough to, get some flyers made. And then we just went all around our town and hung flyers on people's doors. Literally, that's what we did. And even at 12 years old, within about 2 weeks, we had 8 clients, which is where we stopped at because we weren't trying to build a 40-hour week business. We just wanted some money for the summer to do fun stuff with. So we had 8 clients. We charged $10 for most of the clients. We had one elderly client that we charged $8 to mow their lawn. So we were making around $78 a week that we split about $40, $39 each. After gas and everything, probably, call it $30, $35 a week. We were thrilled. But that formula that worked for me at 12 years old still works today. If you wanted to start a lawn care company and you bought your equipment and you're ready to go, how do you get customers? Well, you knock on doors or you advertise. If you have money to advertise, of course, you can run paid advertising, which is just a digital way of knocking on doors. But the reality is most people won't do this step. Most people will buy the equipment if they want to do this. Most people will sit and pray and hope they get business. They'll, try to tell their friends, hey, tell people about me. They'll ask for word of mouth referrals, but they won't go knock on doors. And that's the reason they fail. And they won't knock on doors because, again, emotions. It's not that people are lazy. That might be part of it. It's really the fear. Think about this. It's uncomfortable to go knock on a stranger's door and ask them if they need lawn care. It's weird. It feels strange, right? But if you can get over that, you could build a very successful lawn care company. Okay, example number 2, digital product business. So this is one that I have actually more expertise and more experience in than even trading, right? I've been trading for 6.5 years, but I've been involved in digital products for going on 19 years. Launched my first digital product in 2005, launched my first online product business 2003, but it was a physical products business on eBay. But in 2005, I started my digital product business, which didn't take off for 6 years after that. But it's really, really simple to make money in the digital marketing world. I see people doing this, like, I'm not trying to be critical. I'm not trying to be condescending, but I see people doing the same stuff that I've seen them doing now for 5 and 10 years, right? Super hypey stuff, like super scammy stuff, just launch after launch after launch after launch, because it's like how they're like barely scraping by each month. But the reality is there's a better way to go about that. If somebody wanted to start a digital products business, first off, you pick a niche. Everybody knows that, right? Whether it's, how to do lawn care, how to, get, how to lose weight, how to be happier in your marriage, how to trade, whatever it is, right? You pick a niche, you educate yourself on that niche to the point where you are an expert. People say, well, how do I become an expert? Do I got to go to college? Do I got to get a degree? Do I got to get a certification? No. Listen, if you wanted to become an expert at something, the reality is most people are just so ignorant, right? And not stupid, ignorant. They don't go out of their way to learn things. They just kind of coast through life. And so if I wanted to go out, let's say today, for example, I wanted to go out and start a course on how to play better golf. Now, the last time I played golf was over 20 years ago. I was terrible. I had a summer job where I didn't get paid, but I got to go pick up balls on a golf course with a friend of mine whose dad worked there. And they let us pick the driving range and we get to play free golf. So my buddy liked golf, so I go with him and do that. We play golf a few times a week. Terrible golfer. I know nothing about how to be a good golfer, but I guarantee you if I sat down today and I spent, 8 to 12 hours a day for the next month learning all about golf and golf swings and golf equipment, a month from now, I would know more about golf than 99% of people on earth, right? And you might think, no, yes. Even people who play golf probably aren't that fanatical about golf, right? And you don't need to be smarter than 99%, say 90%. And you're now an expert, okay? But then the step that most of these people that fail or struggle for years and years is barely keeping their heads above water, they skip step 3. They never get any results, right? You need results. How can you be an expert, a true expert, if you've never got results? This is one of my pet peeves with college classes. If I go to college for business, I have a professor teaching me business who's probably never actually owned a business. Like, how crazy is that? Now, me, on the other hand, I'm in my early 40s. I've owned multiple businesses, but they would never let me go to college to teach business. Something off about that, right? So, you got to get results, okay? Once you get results, everything else is easy. And number 1, you got to get results so that you know that what you know is right. But also, number 2, you're never going to be confident, with teaching anything if you haven't got results. You're going to feel like a fraud. You're going to feel like an imposter. And imposter syndrome is a real thing, whether you're qualified or not, but there's a difference, right? You can tell when somebody's faking it. So get results. Number 4, create a product, right? Whatever it is, whether it's golf, whether it's trading, whether it's losing weight, whether it's how to swim faster, whether it's how to jump higher, whatever it is, create a product. And then step 5, Same thing as business number one. You go out and you knock on doors. Maybe in the digital market world, it's not physically knocking on a door. It's reaching out to people on LinkedIn, Facebook, Twitter, whatever it is. You go out there and recruit affiliates. And for anybody that's really serious about starting a business, all you got to do is go out to YouTube and Google or YouTube a guy named Chet Holmes. He's passed away, unfortunately. But Chet Holmes kind of released this theory or this concept of the Dream 100 about 15, 20 years ago. Now, Russell Brunson has ran with that. Russell does give credit to Chet, so nothing wrong with that. But the Dream 100 is essentially a strategy of where you make a list of the top 100 people you want to work with in your niche. And then you, instead of spending all your time trying to get customers, you spend your time trying to get those 100 partners to partner with you. And that's actually an extremely effective strategy. For example, back when I was doing digital marketing was my main source of income. And when I was, in the affiliate marketing game and all that, my top affiliates would often push anywhere from $50,000 to $100,000 in sales per product they promoted. And so just having one affiliate, for example, might mean that my entire year, like as far as my necessities, were covered by that one promotion from that one affiliate. The last webinar that I did before I decided to get out of the marketing game and get into trading full time, I did about $100,000 in the first 30 days. That was with just two affiliates, right? Two affiliates promoted it, made over $100,000 in 30 days. So yeah, that's it. Knock on doors, easy stuff. You'll see people trying to teach Facebook marketing and teach Twitter marketing and TikTok marketing and all this stuff. But the reality is just recruit affiliates. It's the simple way to go, just like the other businesses. Knock on doors. Number 3, trading, right? If you want to be a successful trader, how do you do that? Well, step 1, you learn technical analysis. I don't care who you are, with very few exceptions, if you don't know technical analysis, you're going to struggle with trading. There are traders out there who rely on fundamental analysis, but they tend to be more on the investor side than the actual trading side. So first things you got to do is learn technical analysis. It doesn't take long. You can learn technical analysis in a week. 1 week might be what's standing between you and making money as a trader. 2, you got to learn a trade system. Just learning technical analysis is not the same thing as knowing how to trade. I could know technical analysis. I can know what a triangle is. I can know what a range is. I can know what a trend is. I can know all these things. But unless I know how to take that and apply it to a trade system, it doesn't really do me any good. Okay, so a trade system would be something, for example, that says, this is a type of trade, setup that I'm going to go long. This is a place where I want to go short. This is the type of money management I want to use. This is the type of risk management I want to use. This is the type of, ratios I want to use. 3-to-1, 4-to-1, 5-to-1. On this trade, it's a 1-to-1 scalp. On this trade, it's going to be a trend trade. I might go for 10-to-1, so on and so forth. That's a trade system. And then step 3, trade that system religiously. Don't gamble. Don't guess. Don't get bored and just throw money at the wall and hope it sticks. That's what causes people to lose. And also, by saying trade that system religiously, stick to your stop losses. Again, this is all about emotions, right? You go back to step 2, the digital product business, people don't recruit affiliates because they're afraid. They're afraid people will get mad at them for reaching out. They're afraid they're going to look stupid, blah, blah, blah. In trading, people are afraid to lose money. And so they close winning trades early and they let losing trades run because they're hoping it'll come back their way. And then it goes bigger and bigger and bigger until they blow up their accounts. All right. And step 4, if you can do all that, profit. Okay. Filing, another, example that's outside of this financial world, weight loss. How many people really think you need to go out and hire a nutritionist or a personal trainer or some kind of doctor, expert, et cetera, to lose weight? Unless you have an underlying health condition, you probably don't need any of that. Now, I'm saying that as a guy that had a personal trainer. I paid a personal trainer for a year, did really well, went to the gym 7 days a week in 2014. Best shape of my adult life. It was worth the money. It was expensive, but at the end of the year, I got rid of that personal trainer and I kind of fell off track. So in that way, a personal trainer is handy because of the accountability fact. But if you can get over the accountability and just make yourself do it, losing weight's a very simple thing. You don't need to exercise to lose weight. Now, some people are going to be like, what? But anybody that knows about weight loss or nutrition is going to know what I'm saying is accurate. Weight loss is not about exercise. Weight loss is simply about calories in and calories out. Okay. Now there's some nuances. There's some hormonal things. There's some things like, good calories versus bad calories, all that kind of stuff, spiking your sugar, insulin levels, all that stuff. Yes, all that stuff does impact how effective your dieting plan is or your nutrition. But at the end of the day, one thing you can say with almost zero doubt is if somebody was to determine their RMR, which is resting metabolic rate, and there's to subtract 500 calories from that and eat that level of calories every single day, over time they would lose weight, again, barring underlying health conditions, etc. And also, if they weren't doing things like eating, let's say that their RMR is 2,000. If you eat 1,500 calories a day of sugar, you'll probably still lose weight, but it's going to be really, really unhealthy to do that. Okay. And miserable, because you're going to get, your ghrelin hormone is going to be completely out of control. But the funny thing is this is simple. And yet, how many billions of dollars a year are spent on weight loss programs, on P90X type stuff, on Insanity, on all these infomercial products, when the reality is, if you look at the math, exercise will not make you lose weight by itself unless you're just super strict with your diet. Because let's say that you work out super hard for an hour, maybe you burn 300 calories, maybe, okay? 300 calories over 7 days is 2,100 calories. That's going to be about 9,000 calories a month, less than 3 pounds a month you're going to lose from that hardcore exercise, versus you could just eat 500 calories less, non-exercise, and lose almost twice as much weight, okay? And again, if anybody's wondering, I'm not talking on my rear end. I'm not a doctor by any means, but I have spent hundreds and probably thousands of hours researching weight loss and nutrition, because both of my parents passed away in their 40s. They were both heavyset people, and I have struggled with my weight from the time I became self-employed until now. I've kind of yo-yoed with my own weight just because easy exit of the fridge, boredom, anxiety, sitting in the same four walls every day. There are some drawbacks to being, self-employed. But that's it. That's all there is to it. Like, you could apply this to anything you want to do in life. You break it down to the simplest steps, and then you follow those steps. Consistency is really the key to success. I remember when I was in sales, I spent some time as an insurance salesperson, licensed and all that kind of stuff. And in our training, we learned about a quote from Calvin Coolidge. It said, I don't remember the exact quote, but essentially what it said was, talented people who are unsuccessful, it's almost a cliche, right? Talent doesn't really do much for you in life. It only take you so far. It's determination and fortitude, basically, that determines who is successful and who makes it and who doesn't. And that has been, in my experience of being around other business owners and other successful people and unsuccessful people, that has always been the case. It's not how smart somebody is or how talented somebody is. It's how consistent they are. For example, like, look at my group here, right? Look at my YouTube channel, my Facebook group, etc. They were growing. It wasn't because of the market. Sure, that helped, right? The market being bullish and all that. But if you think about it, if you knew my stats, my channel blew up the most in 2020 when the market went boom and dumped. Why? Because I was consistent, daily videos on YouTube, daily posts on Facebook. And then when the market finally dumped, because I was kind of contrarian and calling for the dump, of course it popped. But you look at it now, and the group has steadily went down. My subscribers on YouTube have went down. Why? Because I never do videos anymore. Like once a month, once every 2 or 3 months. Lack of consistency. So the channel is dying, the group is dying, etc. I recognize that. I've just made a conscious decision not to spend a lot of time and effort. Not because I don't like doing it, but I'm spending way more time on this stuff than I was on my actual trading and making money myself, which didn't make a lot of sense. So, all that being said, that's summing up essentially almost 20 years of business experience. And, I've been self-employed now. I haven't had a job since February 2011. Right now I've got my construction/excavation company. I have my, I guess you would call it a software business. I don't treat it like a business because I don't have an email list. I don't do any marketing or advertising. I don't recruit affiliates. I don't do anything for it, but it does make money. So in that sense, it's a business. My software indicators and my trading course, of course. And then I have my trading itself, so if you think about those things, and then here lately, I've been doing a coding boot camp. I've blanked out, brain fart, shorted out, whatever you want to call it. But yeah, that's really the key, guys. And obviously this channel nowadays it's about trading, but back in the day, this channel was actually a business channel. And so I want to kind of share all of that. And, I've done some business related stuff in the past. It's really happened in 2020. I released some stuff teaching people how to do software for a living without having to learn to code. And of course, as I've mentioned in the past, somebody was actually able to take that and build a multi-million-dollar business. I know $1 million business in the, like 6 months or so after the video. I'm assuming by now they're at multiple millions. But I like doing stuff like this once in a while and just kind of reminding people, like, you don't have to be stuck somewhere in life. And I'm not saying like quit your job and go out and do this. You can do a lot of stuff on the side, like trading. Trading is not something you have to do full time. You can do that around a job or a career. A lot of people are happy at their career, and there's nothing wrong with that. I think there's this big mistake that people make that, you got to do one or the other. I often think to myself that if I had it to do over again, I think I probably would have kept my job longer than I did. And because I made a really good living at my job, I had really good benefits, and it would have been nice in many ways, those first few years especially, to have all the income from the business, which did really, really well out of the gate. The first year I made over 6 figures, but also still have my job income. And then instead of living off of the business income, I could have reinvested 100% of it back into the business. I think it would allow me to grow faster and maybe avoid some of the mistakes I made. So, again, whatever it is you choose to do, maybe it's not on this list at all. It's really about emotions, right? And I'm going to be releasing a brand new course in 2024. A lot of the same content, but I've been building a new members area, completely coded this from scratch myself, getting away from all the cookie cutter solutions out there and just doing my own custom stuff. So I'm going to be releasing this in January, teaching obviously my trade system, along with technical analysis and things like that. And also I will include access to my proprietary trade indicators. So I'll be releasing this in January to help folks out. As far as charts go, we're 20 minutes in, but let's take a look at a chart. I haven't done that in quite a while. What should we look at? Let's look at, what's everybody want to say? I'm sure Bitcoin. So first off, let's get off my QQQ chart and go to the Bitcoin chart. Take a look at market cycle first, see where we're at on that. So let's look. This is that 3-day market cycle chart. This is Bitcoin versus the QQQ, first posted up in November 2021. Still following that chart like a champ, right? Again, I talked about this a few weeks ago when I last looked at this. This does resemble a lot like disbelief, which would mean this back here may have been anger and depression through here. Instead of making a lower low, it may be that we get a little bit different pattern on the chart, and this may be disbelief, in which case what happens after disbelief, you typically have a disbelief pullback or correction, and then a new bull market starts. So for you bulls out there, that's very promising. That's what it looks like. And of course, it's staying inside of this trend line, right? Bottom channel's not near as clean. The top of the channel's very clean, right? Beautiful trend line stopping right there. I can't really say too many bad things about Bitcoin versus QQQ. It looks pretty good. The only thing I would say is the same thing I always say, which is, I'm skeptical of this bull market in stocks, which if the QQQ dumps, Bitcoin can gain value versus the QQQ go up on this chart and still go down in US dollar value. So that's something to keep in mind. But yeah, on this chart, this does look a lot like disbelief, this disbelief over here. Let's look at a Bitcoin versus US dollar chart. Take a look at the weekly clean chart I got set up here. So weekly clean, what are we seeing? Well, right now we're seeing this big pump. I did talk about this pump again last year, talked about how in bear markets, it's not unusual to get 100% rallies. And so if we take a look at this rally, this is actually 191%, almost twice 100%, which is a pretty big rally. Even for a bear market, that would be unusual. The only thing I would say is be wary that the fact that, this is yet to take out the 61.8. Okay. And if you're wondering, why do I care about that? Well, if you recall, this is the same thing that happened in 2019. We had a massive pump off the bottom, which was our disbelief pump. Okay. Pumped 343%. And then we had the correction before the bull market. So again, when we look at that market cycle chart, it looks like we're in the disbelief phase, which means that we still have a disbelief correction to go. And this is pumped quite a bit. 61.8 sitting right up here which means that maybe we get that dump soon and then the bull market kicks off. All right. It'd be very similar to what happened in 2019 back there. As far as alts go or total market cap, let's take a look at that right quick. So this was the chart that I posted up. Well, I think I actually have a chart drawn up for this. Yep. There. So this was the line that I talked about in November, October of last year, saying that, it'd be normal for this to pump up to this level here and then dump from there. And so let's get all the indicators off for a second. So again, 61.8, that's exactly what it's done. Total market cap has moved right back to that level. Okay, now that's the 61.8 of this move here from this move. So if we take all that off there and we drop to the top, we're not there yet. We're just above the 38.2. So something to keep in mind. Total market cap has pumped, let's see, about 131%. Okay, so could still be in some kind of bear market, but to me, it still looks more like, well, I don't want to say it looks like a bull market because it doesn't look like a bull market on US dollars. It looks more like a bull market getting ready to start soon on the market cycle chart. But this is still a bit sketchy. This could absolutely be, just a pump and a downtrend. If you think about this from a pure TA standpoint, no biases, no nothing like that, just pure TA. This is a monthly chart. What you have is this high, this higher low, right? Because it's higher than this. But then you have a lower high and you have a lower low, which is actually a new downtrend. And right now, this is really just a lower high. It hasn't really put in any bullish structure on a monthly chart. So if that's the case, there's always that possibility that this is actually what's happening, right? Coming back up to this old level here, and then you get your more downside. And that's stereotypical textbook behavior in a downtrend. That's what's supposed to happen. You're supposed to go back and retest the old low. So that's literally what it's doing. It's retesting this old zone through here. So something to be mindful of. I'm not personally running out to short Bitcoin or anything, but there it is, right? Do with that information what you will. Again, that's total market cap. What else we got here? Look at the QQQ. QQQ looks weird right now. It's really kind of a wonky deal. So I'll pull that up. We broke the all-time high. So right now the market's sitting at an all-time high, or near an all-time high. It's a little bit off where it was a few days ago. But if you look at this, maybe this is a giant double top. Maybe. I expected last year to get this top and then to get a complacency bounce. So I thought we'd come up to about this level here and then continue our downtrend, but that hasn't happened. With the government cutting interest rates or talking about cutting interest rates, they haven't yet done it. It's injected a lot of hopium back into the market. Now, I personally think that's a bad thing. I don't know what it means for the market, but personally, I think it's a very bad thing for inflation and for the strength of the US dollar. And, for a multitude of other reasons, I think it's terrible. I think at very best, they're kicking the can down the road and we're going to have something really bad happen later, even if it's years from now. But from a market standpoint, it's really tough to look at this and say, oh, this chart looks bearish. Okay. No, I'm not saying that I want to run in and get into long positions because, again, when you look at this and you zoom out, it's very hard to be excited about investing in the QQQ at these levels. I think what's really happened is this pump was driven mainly by an AI bubble, right? Stocks like NVIDIA, stocks like Apple, AMD, etc., pushing this up way higher than what it should really be right now. QQQ it's a little bit wonky in the way they weighted. If you go and look at the actual stocks, a lot of the stocks compromise a tiny percent, and then you have some stocks compromising 5 and 6 and 7% of the entire ETF, which is a bit wrong in my opinion. So, if you think about that, if a third of your ETF is made up of AI stocks, for example, and the AI has a bubble, which most people agree AI is in a bubble, of course, it's going to drive the price of your ETF up. So I still think it's sketchy territory over here. Me personally, I'm just being patient. I look at it like this. Even if this goes higher, that's fine. I'm kind of the same viewpoint I had on Bitcoin a few years ago. I have no problem missing out. I have no problem, watching a train go by without me. There's plenty of money to be made in this market, not chasing a certain stock or a certain cryptocurrency. There's always another opportunity. And again, this goes back to that emotional thing. There's always another opportunity. If you miss this coin or this stock, so what? There will be another stock. These patterns have been repeating for hundreds of years. You just go find a new asset. So for example, I didn't invest in the QQQ at all in the last 10 years, like through this run. I wasn't investing in stocks back then. But I did invest in things like, NEO. When NEO fell like 90+% of the stock NEO, or when things like Robinhood fell, I bought Robinhood at like $6 or $7 a share. I don't know what it is now, but those were investments, not trades. $13. So I've doubled up on that. Bought things like Unity at like 95% off or whatever it was. Unity was kind of a funny one because I bought it lower than it shows in the chart because I bought it in pre-market trading. And so I actually bought it lower than the lowest point in this chart. So I'm more than double on that. So you look at that and go, wait a minute, so you're doubling up. Well, yeah, I'm doubling up because I'm not chasing markets. I'm not trying to buy assets that are up hundreds and thousands of percent. I'm waiting for assets to fall 70, 80, 90% if I want to invest in them. And then I'm taking a look at those assets. And the reality is, I had this long talk with my brother the other day who's very successful in business, very successful in investing, but his strategy with investing has been the same strategy that a lot of people use. He just dollar cost averages in, has been doing that since he was like 20 years old. And so he was kind of curious about like how my strategy differed from that. And I was showing him how chart after chart after chart, almost every stock, almost every tech stock at some point has a major sell-off in the 70 to 90% range. Like if we go over here and we look at, I have a whole list for the Qs, right? These are stocks on the QQQ. If I go down by signal, right? We'll just go back. We'll put this on a 3-month chart so it's easy to see, right? So if you look at this, it's this log or regular chart. Okay. Big sell-off here, right? We'll just measure it real fast. Look at this. This was a 55% sell-off. There's a bunch of sell-offs throughout the stock's history. Or look at this one. I don't even know what these companies are. Big sell-off back here. 69%. Here is Apple. Now look at Apple. Would you really feel comfortable investing? Look at this. How can anybody look at that and say, well, that's not parabolic? Of course it's parabolic. It's ridiculously parabolic. But if you go back and look, time and time again, when Apple goes parabolic, what does it do? Look here, back in the dot-com bubble. Here's Apple, parabolic, dumps, 83%. That's where I wanted to buy Apple at 25 cents. Okay, Airbnb. Well, Airbnb's just got done dumping, right? Adobe, right? Huge dump here. How much did it dump? Dumped 60%, but there were people who were getting FOMO through here. Back here, this is back around the dot-com bubble. How much did Adobe dump back there? 81%. How much did it dump over here in the financial crisis? It dumped 67%. We can go down this list, stock after stock after stock. Here's AMD, which of course is an AI stock. Boom, huge run up, parabolic. People were getting FOMO back here. Sure, maybe they invested out on there even now, but why would you want to buy up here at 145 when you could have been buying down here at 55, right? How much was that dump? 70% or so, 66.8%. How much did it dump back here? 96% it dumped back there. How much did it dump back here? 93%. You're going to see this over and over. Here's Amazon. Amazon back in the dot-com bubble. What happened? Amazon dumped 94.98%. I don't want to buy stocks. That's me. I'm not saying you. You do what you want. I don't want to buy stocks at all-time highs or near all-time highs. I don't want to chase the market. I want to look for stocks that I believe in, that I think have a good, strong future from an investment standpoint, and I want to buy them after they've been put on clearance. Okay. Think about this in terms of cars. If I want a new car, and let's, for easy math, say this car costs $100,000, I'm not going to go out and buy that car when there's a lack of supply and excess demand and it's pushed the price up to $200,000. No, I want to wait until nobody wants the car. The same brand new car sitting on a lot. It's a 2023 and now we're in 2024, and they drop the price to $80,000 or $60,000 or $40,000, right? Usually you're not going to get that with cars. But you see what I'm saying? I want to buy that car when it's on clearance. I don't want to buy the car when it's marked up over MSRP. Same thing with stocks. I don't want to buy stocks over their fair value. I want to buy stocks under their fair value. Okay. An easy way to find fair value, it's not perfect, but just a general guideline you can use. You can look at the VWAP. So if you go over to TradingView, where the hell did they move VWAP to now? We're always moving stuff. So anchored VWAP, right? You can choose a point to start. I like starting early in the stock's history. So if I start back here on Amazon, the VWAP's actually down around $20. If I could buy Amazon at $20, I'd be very happy to get into Amazon. Or even going back and saying, well, what about the VWAP from the dump in 2018, where it dumped? I don't know, where did it fall? Fell about 36%. Not as good, but let's say that I could get in on that VWAP. Okay, well, that was 122. Okay, that would have been better buying at 122 when it pumped, waiting for it to come back to this level, than buying up at this level. Okay, and I wouldn't buy there personally, but that's what I'm doing. Or if you look at something like Tesla, right? So look at Tesla stock. So if you look at Tesla, parabolic run, big dump, right? Over and over, the same pattern, guys. Hundreds of years, 75% drop. So if I go and I put a VWAP on Tesla, see this? That's where I might be interested in buying Tesla, around $81 if I'm an investor. Or if I don't want to take that whole range into consideration, I just want to start it from where it broke out at, like over in this area, that's okay too. I would have wanted to be buying around $129, and not up here, down here after it dumped. Okay. That's kind of how I approach investing. I'm looking for stocks that I like, stocks that I think are going to be good stocks in the future, which is based less on technical analysis and more on fundamental analysis. And then I'm trying to buy those stocks anywhere from 60 to 95% off. That's what I'm trying to do. And, that's why I don't get too excited or too emotional about, oh, the QQQ is going to all-time highs. Great. But that is, unless that QQQ dumps, I don't really care about that, other than, moving in and out on smaller time frames, taking a day trade on the QQQ, or taking a swing trade where I think it's going to move up this much over this week or that week or whatever. All right. So the video's getting fairly long, but I mean, at the end of the day, I just can't stress this enough. There's nothing complicated about trading. All the videos where people try to, get egotistical and pat themselves in the back, or pretend like they've got the end-all be-all system, they don't exist. There's lots of people that have really great trade systems, and most trade systems out there probably work fine. That sounds crazy. People are like, well, you have a trade system. Why would you say that about your competitors? Why wouldn't I? It's the truth. Most trade systems probably work fine. The reason people fail with trade systems is because they personally don't follow them. They break the rules. I'm sure most trade systems is somebody, I say most, I'm talking about real trade systems, not something that somebody comes up with on a Saturday afternoon, but something somebody's traded themselves for, a year, 2 years, 3 years, whatever. Most people could probably do the exact same thing and get similar results, except they won't do the exact same thing. They'll close the winning trades early out of fear. They'll let the losing trades run out of greed. I can't take that loss, and then that $100 loss will be a $500 loss, will be a $1,000 loss, will be a $5,000 loss, right? But if you can avoid all that emotional baggage and emotional mistakes and just trade a system, I would go as far as to say you could almost blindly trade the trend with almost no trade system and probably still be successful. Maybe not quite as successful, but at the end of the day, it's emotions that wreck people. It's the same reason that people don't do well in sales jobs, because they're afraid to cold call. They're afraid to approach people. They're afraid to go for that close. It's the same reason people don't do well in business, because they're afraid to ask for business. They're afraid to advertise. What if I spend money on advertising and nobody buys my product, and now I've spent money that I didn't get back? What if I spend my time knocking on doors and everybody slams the door in my face, and that's time I won't get back? Plus, it's embarrassing. What if I go on this diet and I don't stick to it and I just gain the weight right back? Why did I even bother in the first place? That's it. What if I ask this girl out or ask this guy out and they say no? I'm not going to ask them. That would be totally embarrassing. Now that person's missed out on what might have been a beautiful relationship, a marriage and children and all this stuff in the future. That's fear. That's the thing, fear, and a little bit ego. Because again, a lot of people avoid doing things that they find uncomfortable or embarrassing. And a lot of people don't want to trade for fear of losing money, but also for embarrassment. How many people have tried to trade and friends or family have told them that's silly, you can't really do that, blah, blah, blah. And you don't want to go out there and lose money and then have to admit to your, maybe your spouse, for example, has told you not to do this. You don't want to go to your spouse and say, you're right, I lost a bunch of money. So that fear holds people back. The trading itself is very, very simple. I really talked more about investing here and, of course, some business-related stuff. The trading is the same thing. You're looking for trades. You're looking for specific setups, specific patterns in the market, and then you're taking, designated actions. Okay, on this pattern, I know the market's likely to do this. And what holds people back on a lot of that smaller time trading, like day trading, they'll see something, just as an example, this isn't a trade I'm saying you should have taken, but maybe they'll see something like this where, a stock broke above a certain level and they know that, hey, excuse me, I started coughing. They know that, hey, this is probably more likely to go up than down, but they get scared and they don't take this trade because of fear. Okay. But what if they went there and they said, hey, I'm going to take this trade every single time I see it, and I'm going to take a trade with a 3-to-1 reward to risk ratio. So they're going to say, take this trade here on the open of the day. And let's say that they say, I'll close this trade. This is Tesla. It's $100 or $200 something stock. I'll give it $1. Every time I'm going to give Tesla $1. Again, I'm not saying this is a trade system. I'm just making up some really off the cuff rules to kind of show you how this would work. So they got this trade system that says they're allowed to risk $1 on Tesla. Okay, boom. There's the $1. Close enough. $1. Come on. $1. And this, again, they're going for 3-to-1. So every time they see this, maybe they trade this just like this. They risk $1 and they're going for $3. Okay. Well, if they're doing that and they're consistently following it, closing the trade if it goes here, closing the trade if it goes here, they only got to win that trade about 35% of the time to be a profitable trader. Right. And that's how it works with trading. Again, I'm not saying that's a legitimate trade setup, but that's how trade setups work. Somebody sees a pattern and they know, okay, this is my risk, this is my reward. I'm going to put it in. I know that statistically I'm going to win about XYZ amount of the time. Now, what's funny about people is they'll avoid doing something like this because they're like, yeah, what if it loses? Well, I hate to break it to you, but even if you're really good at trading, even if you have a really great trade system, you're probably still going to lose half the time. And that's because you're going for a bigger win than you are a loss. Now, if this was 50-50, it'd be easy to win more than half, or easier to win more than half the time. And some people do that. Some people scalp 1-to-1 trades. But if you're trading a ratio of 2-to-1 or 3-to-1, you're asking the market to do a lot more to give you a win than you're asking it to do to give you a loss. So even the best systems are going to have a high loss rate. And the reality is it's always going to be that way because there are computers and algorithms and all these hedge funds and quant firms out there. And listen, if there was a trade that just had an 80 or 90% win rate, nobody would take the other side of that trade, right? You wouldn't be able to take the trade because nobody would trade against you. Everybody would be long or everybody would be short. The reason that you can get your trades filled is because there is a high probability of it going either way, which means that there are going to be some people saying it's going this way and some people saying it's going this way. And that's what allows you to get your orders filled. And that's a good thing. That's what allows you to get filled without a ton of slippage. If everyone was going long here, then you'd have massive slippage. And maybe you want to get in here, but you got filled way up here. Okay. So very, very long video, but again, I don't do very many. So I thought I'd do this one today to kind of wrap up 2023. I hope it's been an excellent year for you. It has been an interesting year for me. I learned a lot this year. I got into coding heavily again, and that's been a lot of fun. And yeah, I've just enjoyed it. I've taken a kind of a different route this year. You know, I didn't do a lot of videos this year. I didn't do a lot of Twitter, and that's been really good for my mental health. I just focused on my own trading and focused on my own little world here. Okay. So hopefully it's been a good year for you as well. I look forward to 2024, and I look forward to releasing more content. Probably not daily content again. Probably won't ever do that again. But I will be releasing more content, and I hope you will continue down this path. I hope you will make a decision and a commitment to learn to either trade if that's what you really want to do with your life, or if you don't want to trade, I hope you'll make a commitment to say, I'm done with this. I'm going to go spend my time doing something I enjoy versus wasting my time dreaming about something that I'm never going to do. That's not harsh. I don't mean that in a bad way. Why spend time, daydreaming about something if you never seriously plan on doing it? Life's too short to do that. All right. So this is James with Crypto Common Sense, again, aka 3 Peaks Trading. Please remember, I am some guy sitting in a spare bedroom, which means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. If you enjoyed the video, give it a thumbs up. Make sure you subscribe to the channel if you like this content, and leave me a comment that helps drastically with that YouTube's dreaded algorithm. All right, this is James. As always, reminding you to please trade safe. I'll talk to you soon.